Hi, everybody. I just wanted to reach out to you today to say hello and hope that everybody's doing well and making it through these interesting times with social distancing and virtual conferencing. Obviously, we're living differently for the moment, and I hope that we're getting back to normal, whatever that normal will be in the near future. But in the meantime, I thought it'd be important to share some information with you. I've had a number of conversations with folks lately asking questions about the market and how is the market. Is it 2008 all over again? Is this going to be a bad time for real estate? Should I be buying? Should I be selling? What is in store for us in the future? And so there's been a lot of those questions. I've had a lot of those discussions, and I thought that today I'd take some time to share with you some of those answers. My plan here today is to really talk to you about the market at the moment. Realistically, the data that we're seeing that has just come out last week that we've been digesting a little bit, that I think that will be important to many of you regarding what's going on in the market here in Las Vegas at large. In the coming days and weeks, what I'd like to do is to share more information with you regarding the market at large. What is the prognosis? What are the experts saying? Not the pundits, not the people with an agenda, certainly not the news people that are looking at averages. It's what is really happening in the market from the experts. Obviously, none of us know, and that's an important caveat in all of this. I'm no economist. I don't pretend to be one. I'm not an attorney. I'm not a financial planner. I'm a realtor. I'm a broker. I'm a real estate agent who is on the ground and has been for a long, long time. I'm going on 25 years of doing this. So it's not my first rodeo, unfortunately. In fact, when I first started in the business, my first event like this was the S&L crisis. And after that, we've seen several more, including a couple of wars and certainly 9/11, and obviously the Great Recession. And here we are in another. This gray hair didn't come for free. I've been through the trials. But that said, we've always made it out of these trials as well. And so I really thought I'd share some information that I think is helpful. So what I'd like to share with you today is the very latest data that we subscribe to in the analytics that we're able to pull from them for information regarding the real estate market here in Las Vegas. And I wanted to start with this chart here to really sort of show you historically what happened, right? This is a graph that is showing all price points. Let me change that to all single-family residential properties. That's most of my clients. Previously owned homes, so that's going to exclude all the new home properties, and then bedroom sizes, and those things will fall away as we're looking at pricing. I categorize pricing as we see over here, but right now what we're looking at is all price ranges. And this graph right here basically shows us where we were back in January of 2006, all the way over here to where we are today at the end of March 2020 or 2020. And what you'll basically see here is that at the peak here in June of 2006, the median priced home was right around $315,000. And look at this. Look at where we are today at the median price home at the end of March 2020, almost $315,000. And this has caused a lot of consternation with folks, perhaps worried that this is 2008 all over again. And I am very confident that it's not. And I'll hopefully be able to show you kind of the whys of this in a moment. But this graph kind of shows us what that history is. For the moment, I really want to talk about what's happened over the last year and really be able to give you an idea of this activity over the last year, because it's really the most pertinent. Within the last year to today, we've actually seen very similar sort of marketplaces, and that's kind of what I wanted to share with you today. Again, if we look at where we were in March of last year, we had an average sales price of $295,000. And as I mentioned earlier today, we've got an average or median sales price of about $310,000, right? These numbers are going to vary a little bit just based on how the data is split apart, but not to mention 295 to 310. Hi, that's my buddy Wilson here. Sorry, buddy. We're certainly higher than we were a year ago today. In terms of new listings, if we look here, what we'll see is that these new listings have dropped precipitously since kind of May of last year. May, as we've talked about in the past, this springtime selling season kind of peaks in May, which is not unusual, very common, and something we've seen over the years. But here you'll see that over the last half of last year, we dropped dramatically in terms of the number of homes that were coming to market. And you'll see this trend line in some of the other graphs I'll show you in a moment. But as we bottomed out in January, we've now started seeing new homes coming back. And look at this, 9,700 new homes here in March. Last year, we were at 11,000 homes. That's new listings. In terms of total homes on the homes for sale, we are right now down to 6,000 homes. March of last year, we were at 8,700 homes. So you can see, again, less inventory in the market. In terms of pending sales, these are homes that have sold but haven't closed. So it's likely homes that have been on the market. Homes that went into contract within the last 30 to 45 days or so. We bottomed out right around December, January, and been steadily increasing through February and March. This February and March were terrific months. All things considered, even in comparison to where we were last year. Look, February last year had 6,000 homes, March had 7,200. February of this year had 7,000 homes, March had 7,400. So pending sales is an indicator of activity, current activity, and moving into the future. Closed homes, this is more of a rear view looking indicator. This shows us kind of what's been happening with sales in the past that closed in the current month. Here, there were 7,000 homes that closed in the month of March. Month of March of last year, there were 6,000 homes that closed in the month. And days on market. Now, days on market here, you'll see, again, this is all price ranges, right, in the marketplace. And what we're seeing here is that our days on market has been dropping. It dropped from about 31 days in February down to 27 days. Again, that goes with the pending sales. There's been activity, there's demand. In fact, in February and early March, I was putting in multiple offers and getting multiple offers on some of the homes that I had for sale. But moving forward, in terms of months of supply, this really continues to tell the story of why things are still very healthy for us. Currently, we are down to 2.3 months worth of supply. In March of last year, we're at 3.5. What that is telling us is that we are still in a seller's market. 3 to 3.5 months of supply is considered technically a seller's market. More than that is where we start moving towards a buyer's market. And if you can see here, this 3.8, that technically moves us into a buyer's market. And that happened, in late summer of last year. But that has been dropping because of lower inventory, more buyers in the market, down to 2.3 as of the end of March. And then the percentage list price, this is a really important indicator as well. This is telling us how strong the market is based on an offer to accepted offer, a listing to accepted offer price point. So for example, here we are at a 98.4% percent of list price, meaning that if you had a home that was on the market for $100,000, that home closed for $98,400. Or in other words, 98.4% of the full asking price. You can see that these numbers have been pretty steady, even though this graph looks like it's varying wildly. The whole scale only goes from 98.2 to 98.5. So we're actually seeing quite a bit of stability there. But if there's a trend, it's certainly trending upward. And then in terms of overall dollar volume, this again kind of shows you where we were in the month of March. Very, very strong at $2.5 billion worth of sales in comparison to March of last year, where we were only at $2 billion worth of sales. So, what's $500 million worth of sales amongst friends? So it's all moving in the right direction and has been. So I guess the moral of the story here is that we've seen obviously a change in the real estate market, but boy, we are also seeing some unique factors. We've got lower inventory than we've had over the last year. We've got more activity in the marketplace than we had last year. So that's that supply, demand imbalance. that is leading us more towards us, this thing staying relatively stable. We're not seeing a tremendous amount of price discounting. There are a number of people who are discounting, but we're not seeing significant price discounting. And so as a result, at the moment, we are seeing people just hunkering down and staying solid, doing the things that they were doing as they went into the month of February, month of March, continuing that trend. We'll see what happens as we move forward here into the month of April and be able to give us another analysis on this. I also want to talk a little bit more about sort of why this isn't like 2008, and I'll do that in a follow-up video, and what we're doing with whether we should be buying or we should be selling and what those opportunities are. So I hope that some follow-up videos to this will be helpful. But in the meantime, if you've got any questions, if you're interested in buying something and want to get granular on some of the data in the market, if you're selling and we need to get granular on who's selling in your subdivision or your neighborhood, who isn't, and how better price and position ourselves, we can really dissect this even further than we have today. But in the meantime, I want everybody to stay happy and healthy out there. If you have any questions, we're here for you. We're working a little bit differently, but we're here for you in any case. Hope you'll pick up the phone and call. We obviously have more time to talk nowadays than we did before. But otherwise, stay safe and happy and healthy. Look out for your families, and we look forward to helping you and talking to you soon. Thank you.